That's what's happening to Bitcoin. So in this video, I want to explain exactly what's going on, what's happening to Bitcoin especially, how we got here, where we might go next, and how I'm personally investing. So let me start with arguably the most interesting asset right now, which is Bitcoin, which has been decimated from its all-time highs. And there's a couple interesting theories as to why, and this one really caught my attention. The theory is that Bitcoin has been captured by Wall Street using something called synthetic Bitcoin. Okay, so Bitcoin originally traded like a normal scarce asset where price discovery mostly happened on the blockchain, meaning real buyers with real money took custody of their real coins. But over time, Bitcoin was absorbed into the traditional financial system. And once that happened, synthetic Bitcoins were created. And so today, the buyers and sellers of Bitcoin are not people that are moving coins on chain. Instead, it's the traders and institutions moving it in what are called derivatives markets. Those are things like futures contracts, options contracts, perpetual swaps, things like that. And this is where you can get exposure to Bitcoin financially without ever touching the asset itself. It's actually invisible. Now, we don't know how much leverage there is until something breaks. That's what's happening to Bitcoin. Now, unfortunately, I can't show you concrete evidence of how many extra Bitcoin there are now, but on the low end, estimates range anywhere from between 650,000 Bitcoin, roughly the size of Michael Saylor's strategy company, all the way to as high as 2.5 million synthetic Bitcoin. Now, I want to be clear, this is not the spot ETFs like IBIT, for example, which need to buy the actual spot Bitcoin. But it's the existence of these ETFs is what allows the integration of these derivatives that allow for the short-term control over Bitcoin's price. Because derivatives don't have the same supply limit. If investors want Bitcoin, Wall Street doesn't need to find more Bitcoin, right? They just create more contracts for things like options trading or futures markets. But it's not constrained by the 21 million coin limit the same way on-chain Bitcoin is. That's why once an asset enters Wall Street, the short-term price can be tamed and it can be suppressed. That's the bad news. The good news is price control using synthetic supply only works in the short term. In the long term, Bitcoin cannot be controlled and it cannot be stopped.